Morning everybody, Sive here with ForexPeaceArmy.com. Let's take a look again on euro currency. So, as we discussed in a few recent sessions and actually started last week, that market performance here is not quite bearish, although nominally we have the bearish direction, we have the grubbers, we have the MACD, but performance on intraday charts, well, stands a bit different compared to the natural bearish performance that we usually see when the market indeed is drying by its own without any external impact, something like this. So, and that led us to suggest that maybe something is preparing here, and we're trying to figure out some signs of possible changing of the direction, changing of the sentiment, watching for some patterns around the support levels, and trying to react on the things that we see. So, just because of these reasons. So, it's in general, market previously has shown this great thrust here. Was really good acceleration, and since then we have this type of action. But this type of activity, it also carries a lot of risk, just because market is wobbling, it is choppy, it is showing some occasional spikes, unpredictable, and it really makes it difficult to find the good points and relatively safe stop for position taking. Besides, we're trying now to find a stop that actually doesn't correspond to daily direction, because in the daily chart we have, well, bearish context, and in such circumstances we should be very careful and trying to take into consideration all factors that we have in place. So if we take a look at the fall time frame chart on euro currency recent stop that we discussed with the butterflies, we said this is not really very good for the bulls. It's not quite bullish performance here. Be prepared for a possible another extension. We said that most probable that we will get not 127 but 1618, just because it corresponds to big ABCD target that we have on hourly chart, and in fact we've got it. So you can see that market dropped almost precisely to the 1795, just slightly higher. Now we have the pullback, and the major question that we need to ask is actually, what is it? So should we consider it for taking position? Maybe we start thinking about some reversal patterns around, or it's better to wait and see what will happen. Or it's not the moment yet for position taking. Well, let's see what we have on lower time frame, on the hourly chart. One thing that personally I don't like is uncompleted OP target. Here market is not at the support, it's not at the oversold. 618 support was broken here when we talked about the COP, and recently we said this, if you remember, here might be some pattern to form for minor reaction for scalp traders if you would like to. But you can see that even minor hand shortage has not been formed, market just collapsed. In the current circumstances, despite this big rally, this is a factual risk. And in the current situation, if, for example, theoretically you suggest taking long position, you will have to place your stop anyway below this OP target. It's just because it will not be washed out in the moment when the market will try to retest it before maybe it will change the direction, or maybe not. And for hourly chart, it definitely carries too much risk. So you will have to place your stop for, well, approximately 40-50 pips to the downside. So probably we are, in current circumstances, if overall bullish reaction still starts forming and we will get some confirmation of that, it's better to consider taking the position closer to the possible invalidation point. Besides, still currently we do not have any patterns yet. Here's my minor hint on the possible head and shoulders, but it seems a bit, well, not quite obvious. But this is only half of the story. If we take a look at the cross-market analysis, yes, today we do not have any big drop on the 10-year bonds anymore, I mean in yields. So bonds were rising like crazy in recent few sessions. But we have another surprise on the dollar index. If you take a look at 4-hour time frame chart of the dollar index, you will see that we have unpleasant bullish grabbers that have been formed, and both suggest taken out of the top of this nicely looking engulfing pattern. So that's actually explains everything. In such a combination, when you have two bullish grabbers on the dollar index, you have uncompleted OP, which is actually the target of these bullish scrubbers, you do not want to take the long position right now, because situation could change like it looks on Great British Pound. I will show you just to explain. See what will happen here. We do not need it. Let's suggest that we have this ABCD patching down. Market hasn't quite completed the target at the moment. Right here it shows the pullback, but see what will happen later. It returns right back down and completed the same OP. That's the thing that might happen here on a euro currency. And that's why currently I prefer to wait and see what will happen. Do not consider taking any longs. If we are correct, then probably somewhere around the OP something should start changing. And if we will see it, that's probably the situation that we're trying to use.